Hello and welcome. My name is Vivian Vandenberg, and I work with the Local Government Support Team at the State Auditor's Office. This video will cover the Schedule 6, the Summary of Bank Reconciliation, which is a required component of the annual report for city and county governments. Let's look over the topics covered in this video. This video discusses the BAR's manual offerings related to the schedule, discusses the different components of the Schedule 06, covers some of the common questions we receive over the schedule and troubleshooting tips for those questions, and closes out with some of the bank reconciliation resources that are offered by our office. Let's jump in. Starting out with the BAR's manual offerings. There are two sections of the BAR's manual that provide guidance on the bank reconciliations and the Schedule 6. We will look at each section and go over what specific guidance is included and how it can help with the learning over the processes regarding reconciliation. The first section we'll talk about is found in the accounting section of the BAR's manual and is titled Bank Reconciliations. While this doesn't speak to the Schedule 06 specifically, it does speak to what the Schedule 06 is intended to capture, a summary of a government's bank reconciliation. This page is the first piece of guidance that discusses the purpose of a bank reconciliation and establishes internal control expectations over a government's requirement to document a global reconciliation that includes a reconciliation of both ending cash as well as the cash activity at least monthly. The next BAR's manual resource is the Schedule 06 instructions, which are found in the reporting section of the manual. The instructions follow the same format of the template and provides complete instruction on each of the Schedule 6 template sections. This is a great resource to have open as you're filling out the Schedule 06 and will help you know what is required for each field. This page also includes a quick link to downloading our Schedule 06 template. While there is a Schedule 06 template linked in the Schedule 06 instructions, it can also be found on the BAR's reporting templates page. The template is in Excel format and has built-in formulas. It is recommended to complete the schedule in the Excel template format. However, some governments export a PDF of the schedule from their accounting system and choose to attach that PDF to the related annual report. This is acceptable. The filing system does not have a format requirement for the Schedule 06. As part of the annual BAR's update process, we may need to update the templates based on new accounting guidance or requirements. Be sure to always use the most recent template available on our website and update any internal accounting system as well to match the updated template. We're going to turn our focus to the Schedule 06 itself and go through the template in more detail. Here is a visual of the Schedule 06 in its entirety, but we're going to break it down piece by piece and better understand the purpose of the schedule. The first section of the schedule is the bank statement section. The first step to completing this is to list all the bank and investment accounts that the government has. This includes zero balance accounts and certificates of deposits. Note that the format for listing the government's accounts is a management decision. However, the names of each account should be easily traced to the related account statements received from the financial institution. In step 2, the beginning balance should be included. Note that this schedule is intended to be a summary for the year, and therefore the beginning balance listed for each account should be the account balance from January 1st of the year. This balance should come directly from the financial institution statement for each account listed. Next, we cover the deposits for the entire fiscal year. This is broken down into two sections: the receipts that are true revenues of the government and the interbank transfers in, which capture the transactions when funds are moved from one account of the government to another account of the government. The total of the two columns included in the deposits section should total all deposits for the year. Moving into the withdrawals for the government, see that it is broken down similarly to the deposits section. There's step 5, which is the true disbursements of the government, and step 6, which are the interbank transfers out for the government. Now, something unique to the interbank transfers in and out, these two totals should balance at the bottom of this section. You can't have a transfer in without a transfer out, right? Keep this in mind while you fill in these columns of the schedule. And finally, we arrive at step 7, the last of the bank statement section. This section is the ending balance for all accounts. Again, remember that this schedule is intended to capture a summary of reconciliations and therefore covers the entire fiscal year. The balance that should be in this column for each listed account should be that of December 31st. We are skipping the reconciling items section for now and moving into the final section of the Schedule 6, the General Ledger section. Let's focus on where these balances come from and where they should tie to. So on the left, you'll see an image of a summary of a cash basis financial statement, also known as the C4. This specific image is focusing only to address the beginning cash and investments balance and the revenues and other increases in fund resources. Then on the right side, this is an image of the Schedule 06 General Ledger section, focusing on only the beginning cash and investment balance and the revenues and other increases balance. Pay close attention to the similarities between these two images. Note that the beginning cash and investments balance from the C4 totaling $15,642,324 matches to the beginning cash and investment balance from the image on the right. You'll also see this similarity after a little bit of math for this next part. By adding the total revenues and total other increases in fund resources from the C4, you'll come to the total of $11,359,458, which is what you see on the image on the right side of the screen. Since the C4 has been generated based on the government's Schedule 01 data, these balances should tie every time. Now moving on to the last two parts of the General Ledger section of the Schedule 06, and very similar to our last images. On the left, you'll see an image that is the summary of a C4. This specific image, though, is cut to only address the total expenditures and the total decreases in fund resources, as well as the ending cash and investment balance. On the right side, this is an image of the Schedule 06 General Ledger section, focusing on only the expenditures and other decreases and the ending cash and investment balances. Note that these balances also tie to each other. The total of these two balances tie to the $7,886,850 for expenditures and other decreases on the Schedule 06. And the ending cash from the summary C4 ties to the Schedule 06 balance. Note that these balances will tie every single time, indicating that the schedule has been properly prepared. Now comes the tricky part of the Schedule 06. This is often a main area of difficulty. Struggles can come for various reasons, like a lack of understanding on how the accounting system transactions are flowing, naming conventions potentially for reconciling items in the government's accounting system versus the Schedule 06, things like that. Let's break down this section though and discuss each item. First, we're going to go down the list through the different reconciling items covered in the schedule. Starting with the deposits in transit, note that there are two different line items here. one for the beginning balance and one for the balance at the end of the year. Next comes the outstanding and open period items. This again has two parts, one line item for the beginning balance and one for the ending balance. We then include items such as NSF checks, the cancellation of unredeemed checks or warrants, interfund transactions, and netted transactions. These are the main types of reconciling items that a cash basis government may have. Also included in this section, though, is the balance of those petty cash and change funds. And finally, the schedule offers an other area. This is intended to capture any item that may be a reconciling item that isn't covered in the above options. We often get questions about what goes here, and that's a great question. We're hoping you all can tell us what's been put here if you're the preparer of the schedule. Now that we know the types of items here, let's talk about how each impacts the reconciliation. In looking at the available reconciling items that are presented here, we've paired off the first four together in a sense. These are the same items we just looked at. We are now looking at how the balances will be input based on their impact on the reconciliation. We've zoomed in on this and removed the rest of the section so we could focus our attention here first. Note that the first one, or step 8, is the beginning deposits in transit. If you pay close attention to this and the following line item, which is year-end deposits in transit, you may notice that those year-end transactions from the prior year should be equal to the beginning deposits line item. This is because if you look at the Schedule 06 from the prior year, the ending deposits in transit amounts that are added to that year's activity should be the same amounts that you need to adjust for the beginning of the current fiscal year's reconciliation that you're performing. This same thought process is applied to the next two steps, steps 10 and 11, or beginning outstanding and open period items and year-end outstanding and open period items. The types of activity that should be recorded in these areas is also similar. Think about deposits in transit. These were deposits that a government knows they are getting at year end. However, they have yet to hit the bank accounts of the government. At the end of the year, they're already recorded as revenues in the general ledger and expected ending cash for the government as a result. By adding these amounts, they are intending to increase what's in the bank for revenues and ending cash to match what's expected in the general ledger. Moving our attention to the beginning deposits in transit side of this, the same balance would be used here for the following year. Those balances are still necessary to increase the beginning cash to get to the expected cash amount in the general ledger. However, draw your attention to the next cell over. You'll see that this is a reduction. This is a reduction on the receipt side in the following year because technically those transactions were already reported in the general ledger as a revenue in the prior year. And by removing them, we're ensuring that we're not counting the revenue twice. Moving to look at the other two displayed, the beginning outstanding and open period items and year-end outstanding and open period items. These transactions are expenditures that the government has recorded as expenditures in the general ledger that have not yet cleared the bank. These balances should have the following effect on the reconciliation as a result. At year-end, they needed to be added to what the bank thinks is the total expenditures for the year, and also be removed from the cash balance that the bank thinks the government holds. These balances will also impact the following year's reconciliation as a decrease in the bank balance, just the year-end impact from the prior year, and a reduction in the expenditures. The reduction in expenditures is because once the bank recognizes these expenditures, it will appear as if the general ledger should also. However, these transactions were recorded in the prior year's general ledger expenditures, and if they're included again, the transactions would end up being counted twice. Moving on to non-sufficient fund checks, or NSF checks. NSF checks are those check payments that the government receives that then are flagged as the payee has non-sufficient funds in the account that the payment was made from. This has an impact on the revenue side of the equation and the disbursement side of the equation here. So, governments should be sure that they are deducting those balances on both sides of the equation. This impacts both sides of the reconciliation because the transactional activity shows up in the bank statements. However, it won't be showing up in the general ledger since technically that specific payment was never actually cleared and paid in full to the government. We move on to the cancellation of unredeemed checks or warrants. And from government to government, we find that governments often are not calling this the same thing when we talk about it. Maybe one government issues warrants and not checks, so the initial terminology has already confused them. We generally just note that the schedule is using those terms interchangeably here. These reconciling items are transactions that are increasing the cash balance on the revenue side of the equation. However, you'll note that this is only on one side of the equation. It's not on both sides, and that's intentional because that's how this reconciling item actually impacts the reconciliation between the bank statement and the general ledger. Next, we talk about interfund transactions. This area is covered in the troubleshooting section of this training that we'll get to momentarily. But before we do, I want to be sure that you recognize it's a positive balance on both sides of the equation here. This indicates that these are true revenues and expenditures of the government. However, those transactions never had a bank statement impact. Then the schedule covers netted transactions. I always like to make sure I remind clients when they're using netted transactions as a term that this only happens in unique and special circumstances. There are specific situations that occur that are listed in the BARS manual in which you can net a transaction. I highly encourage you to be knowledgeable on this so that you can be sure you're inputting the right balances for the netted transactions here. We move on to the authorized balance of revolving petty cash and change funds. Recognize here that really the schedule only wants the authorized balance. Generally, this is the same at the beginning of the year as it is at the end of the year. However, we do recognize sometimes change funds are closed or petty cash fund amounts are increased. Sometimes these accounts are opened, and therefore this specific line item doesn't have to have the same amount on each side of the reconciling items area. What's input in the beginning of the year as an authorized balance doesn't need to tie to what you put in the far right column as the ending balance for the year. The balances that are placed in this area are expected to tie to the approved balances to ensure that the cash balances are increased from just the bank statements. None of the activity that occurs in these funds should be covered in this area, and that's because the replenishments of these funds are generally funded from a bank account, and therefore the related activity is captured in the bank statements section already. Lastly, the other reconciling items section. This is to be reported at the net of the items you place into each specific section in this row. Note that there is a plus or minus on each of these cells. This row is the only one that's not specific for how it's expected to impact the reconciliation. You're welcome to use this row for any of the reconciling items at your government that haven't yet been included in the above lines of this section. It's always great practice to maintain a listing of the items that are captured in this line item. This ensures that you can recall what's been included. Also, having a list available for each item helps to evaluate these items as the reviewer of the schedule. That concludes the overview of the schedule. A few takeaways though before we move on. Note that bank reconciliations are a key part of internal controls over financial reporting, and the Schedule 06 is a summary of that information. The recommendation is that a reconciliation is occurring at the government more frequently than this one time at the end of the year. We have found that some governments will put their monthly reconciliations into the Schedule 06 template with a month on each tab of the entire spreadsheet. This assists in the annual preparation of the schedule for the annual report. Be reminded, though, that if there is an error on the Schedule 06, such as the schedule doesn't reconcile exactly to $0, that doesn't mean that there's a financial statement error. In some cases, the Schedule 06 may not use that same terminology on the reconciliation as the government uses for their own. And sometimes all it takes is rereading the Schedule 06 instructions to determine if the reconciling items are being translated as the same entry in each reconciliation. Let's move on to talk about a few of the troubleshooting steps that we go through when clients have a schedule that they're hoping to have assistance with. These troubleshooting tips have been compiled based on processes we've gone through over the years that the schedule has been a required component of the annual report. Our first piece of advice is to review the bank accounts section and double check that all the accounts and details you thought were going to be in the bank statement section is there. Human error occurs, and it's super easy to make a mistake when it comes to spreadsheets. So, first and foremost, take care of the low-hanging fruit. Double check the bank accounts section and each of those accounts related to bank statement activity to be sure that all activity was brought forward to the summary reconciliation. Next, double check the general ledger balances, or the C4, to what has been input on the schedule. Oftentimes, after the Schedule 1 is uploaded to the filing system, there are adjustments that are made, and those adjustments produce different balances. Those updated balances are easy to forget to be taken to the Schedule 06 balances at the bottom of the sheet. Account reconciliations are performed and retained throughout the year, and those are often critical pieces to the troubleshooting of the schedule. Another double check that we suggest when the schedule doesn't match to what's expected is to follow the balances on those individual account reconciliations and compare those amounts to the summary that's been input into the schedule. Because the schedule should capture all of the government's account reconciliations throughout the year, it's easy to lose data or transactions when attempting to summarize that information. We also tell clients often to review their journal entries. Sometimes journal entries may be recorded but then missed on a reconciliation, or they don't get completely posted into the general ledger. Being sure that all recorded journal entries are captured in the general ledger and brought to the reconciliation is a double check worth considering when attempting to ensure that your reconciliation foots. Journal entries are often made to capture inter-fund activities, which means all that financial activity doesn't hit the bank statements, but it hits the general ledger. Those transactions are still increasing revenues and expenditures, so we need to be sure those are being captured on the reconciling items. When clients have negative revenues and expenditures, we also scratch our head and wonder what's occurring in the transaction. If a client comes to us if negative revenue or expenditures are being posted in the general ledger, we'll discuss the transaction and work together to determine if the transaction should be posted as a negative revenue and expenditure, or if the transaction is more appropriately recorded differently. Another tip for troubleshooting is to utilize the required or warning errors that are identified in the filing system. Because the filing system reviews the Schedule O1, it can identify various potential errors, and some of those errors may be impacting the reconciliation. When completing the annual report, these errors are presented within the Revenues Expenditures module. We encourage users that if we're using the other reconciling items row in the schedule, then we should add an additional tab to the schedule to keep track of those other items. It gives a user of the schedule the chance to review those other items and determine what they are and if they're valid reconciling items. Maybe they're items that need to be removed and allocated to a different reconciling items row on the schedule. If you do this, you have the chance to highlight any reconciling items that you're not sure about. If you're wondering, what is this reconciling item? Is it valid? We always are available in our help desk to assist in identifying if an item is truly a reconciling item or if the transaction should be handled in a different manner. If you're an individual assigned to complete the Schedule 06 at your government, know that you're not alone. All cities and counties in the state are required to complete this schedule with each annual report. Consider reaching out to some of those neighboring cities or counties to check in on them. They may have had a similar issue that you're having and they've already worked through it. As governments vary in size, there may be several individuals working on reconciliations, and those reconciliations are being input into the Schedule 06 by just one single person. It's critical to use those individuals to assist in preparing this schedule. Some of the hiccups may be isolated to how a single account is being reconciled. Having a strong internal work group to brainstorm with can certainly improve the input process of this schedule and allow other reconcilers to see how the schedule actually works. At SAO, we really strive to produce as many valuable resources as possible for local governments on a variety of topics. The Schedule 06 is an annual reconciliation summary, so we have some reconciliation resources to share. In our resource library, SAO is proud to have the Best Practices for Bank Reconciliations resource available. We often refer clients to this resource when general reconciliation questions are asked. To find this, go out to our website and hover over the Improving Government tab. Click the resource library and find this resource under the cash receipting option in the Internal Controls library. This resource is really great. We hope you take a few minutes to find and read through it. But let's talk about some of the key takeaways. A big point to remember is that reconciliations must be consistent. Governments should be sure that all accounts are reconciled at least monthly. Reconciliations should also be done in the same manner from month to month for consistency between the reconciliations. Sometimes there are issues that arise that would require a change in the reconciliation process. In those cases, we tell clients, make the change, but be consistent with carrying that forward from that point on. Our resource also notes that transactions should be recorded timely. By maintaining timely recorded transactions in the accounting system, a government can move forward with more frequent reconciliations. The most important part, though, is probably just to be sure that if there are any issues, they're resolved timely. If a reconciliation is occurring and an error is identified, the quicker the error is fixed, the quicker the reconciliation process can get back on the right track. Governments even further ensure that this happens timely if there are reconciliation processes in place to occur more frequently than monthly. Another resource that's in the same category of our resource library is an Excel spreadsheet that poses as a 4-column reconciliation. This resource includes instructions for how to use it, as well as similar terminology to the Schedule 06. It provides a month-by-month reconciliation as well as a summary page. This spreadsheet has been built out by our teams and includes the proper equations to assist in ensuring that all reconciling processes are occurring and reconciling the proper way. The 4-column reconciliation assists in reconciling that ending cash, all deposits, and withdrawals that are occurring. There are areas of the spreadsheet that capture reconciling items, along with notes next to those reconciling items to provide background on how each reconciling item is impacting the reconciliation process. It's a great resource to try out if your government doesn't already have a reconciliation process that's working for them. We also have a newer resource that's posted in the resource library called Following the Money. This is a practical guide to reviewing government bank statements to help stop fraud. Bank reconciliations are crucial to the operation of each government, and to do a bank reconciliation, there must be a review of the bank statements. This resource showcases how important it is to understand the different areas on the bank statements, such as deposits, electronic withdrawals, check payments, digital payment apps, etc., because this knowledge will help a reconciler spot something that may be out of the ordinary. Like, hey, I see checks written out to a company out of state that we don't have listed as a vendor. That seems pretty odd. Then an investigation can follow to identify if this is a legitimate expenditure. Another great aspect of this resource is the section on how to handle red flags. This is what a government should do if you spot a red flag when reviewing the bank statements and doing your bank reconciliation. This includes doing further research and documentation, notifying SAO as required by our state law, and other processes to follow. As part of how to handle red flags, there's a 30-minute follow the money approach in this resource, which gives you a time frame for each monitoring task. This is used to emphasize that doing these reconciliations and monitoring this is doable, practical, and can be done in just 30 minutes. It lays out all the instructions and guidelines for you. Take a minute to check it out. In addition to our resource library, we also have a training and workshops page dedicated to recorded trainings on various BARS topics. This can be found by hovering your mouse over the BARS and Annual Filing tab on our SAO homepage and clicking Trainings and Workshops. We recommend to check this page out periodically, as we're always trying to build up our library of trainings. As we wind down this conversation and training, let's go ahead and do a recap of some of the points we've covered. We're going to do that just by covering a few of these questions to hit those topics home. Question 1. Is this true or false? Petty cash accounts belong in the bank statements section of the Schedule 06. This is false. Petty cash accounts should only be listed in the reconciling items section of the Schedule 06. All of the activity of a petty cash account is captured in the reconciliation by the replenishments that are performed during the year. If a petty cash account is listed with all of the transactions in the bank statement section of the schedule, you'll want to pay attention to this, as it's likely going to cause an unreconciled variance in the schedule. Question 2. Where do the numbers for the final section of the schedule come from? So that's the last section at the bottom of the schedule. The options are A, the Schedule 01, B, the C4 and C5 statements, or C, the government's own trial, balance, or general ledger report. Well, this is actually a trick question because all of those balances on these three options should be the exact same. The Schedule O1 is uploaded into the filing system, which should match the government's general ledger since the Schedule O1 is generated from the government accounting system. Once the Schedule O1 is uploaded, the filing system generates the C4 and C5 statements, if applicable. All of these reports are options for the government to use as they fill in the final section of the Schedule 06. Question 3. What's the purpose of the Schedule 06 for auditors? A. To be used as a guide to perform the cash reconciliation. B. To be used as an answer key for the cash flow reconciliation. Or C. As a tool to assist in performing the cash flow reconciliation. Now, while the Schedule 06 may tie out to the cash flow reconciliation perfectly, wouldn't that be awesome? It is really only used as a tool to assist in performing the cash flow reconciliation during our audits. It should assist in conversations between the auditor and the preparer in the case that any questions are presented as a result of the auditor performing the cash reconciliation. Question 4. How many accounts can you have in the bank statement section of the schedule? A, 6, B, 10, C, 14, or D, it depends. Those of you who answered it depends are correct. This part of the schedule is the only part that you should be adding line items to. Note that if you're adding line items, that these specific lines are included in the equations that are already in place throughout the spreadsheet. Question 5. How often should a government reconcile? A, monthly, B, annually, C, daily. The answer here is daily for most governments. There are some governments that can reconcile less frequently. However, reconciliation frequency should be based on the amount of activity occurring at each government. Thank you so much for coming today to watch this video. Note that if you have any follow-up questions or questions at all for our team, you can always submit a help desk ticket to our office to connect with us. Have a great day.